morning, welcome to IG's early morning call. It's Monday, the 30th of October. Let's take a look at the headlines as we wait the start of what could be a tentative start to the trading day across the European markets in the session in today's trade. We are awaiting some key economic data out this week. Last week we saw some good GDP number out in the US economy. We've got German GDP and CPI data out today. French, same thing tomorrow. Central bank decisions this week. We got the Fed, we got the Bank of Japan, we got the Bank of England. None of those expected to move on interest rates this week. Let's take a look at what's happening in terms of some of the corporates. HSBC earnings in amongst the headlines today. Earnings are up. Pre-tax profit more than doubling in the third quarter. There's higher net interest margin, and that's helped some of the bottom line. But the stock is down 2/3% in the Hong Kong markets. And let's take a look at what's happening in terms of the US, because we saw a big week last week. It is relatively large today, although today we've only got one all-session stock worth looking at, and that's McDonald's, which reported its third quarter today. We'll look ahead as well as some of the other stocks to watch out for in the US markets later on this week. Look at volatility. We're broadly speaking holding on to the gains that we've got well above the 20.7 is where we are on volatility at the moment. And this little bit of a retracement that we got here today is manifesting itself in a little bit of a bounce for the equity markets. The big declines we saw last week, broadly speaking, held on to. London, it didn't actually break this line of support down here at 72.15. Once it does that, we're then basically on the way down to the levels not seen since 2022. And that would be a fairly big moment, I think, for the London markets, if indeed and when that happens, which I think it probably will. It's just a question of when. German DAX last week trading well below this previous line of support at 149.43. And we've now got our eyes on this price target down here, 14,458. Again, like the London markets, a little bit up on the trading session. In fact, looking for a stronger start on the trading day today. Same thing on the French markets. But significantly in France, we closed the 24-hour session down at levels not seen since the 4th of January at the back end of last week. That big decline on Friday. Real concerns about debts, real concerns about rising yields, real concerns about geopolitics. Interesting enough, those rising yields, broadly speaking, are doing much of the heavy lifting for the central banks. Anyway, we've got the markets up at the moment in the French session, but I think it is just a retracement in what is otherwise a market which I think tending on the way down. Insofar as where the French markets go from here, bearing in mind we've got a break of that 67.77. We might have got up above there today, but I think you get some more of a concerted effort on the way down. This is the next price target, the lows we had back on December 2022 at 63.75. Let's take a look at what's been happening in some of the other markets around the world. In Asia, broadly speaking, a day of negativity. We had seen a little bit of a rise, the Nikkei 225, as the dollar traded below the 150 level on the yen, which we'll take a look at in just a moment. But it ended down with a drop of almost 1% on the trading day. Also losses on the Hang Seng, S&P ASX 200 also on the way down. Wall Street on Friday, it was broadly speaking a negative day. S&P 500 fell into technical contraction. That's a 10% drop from its summer peak. All this on concerns over rates, geopolitics, and the recent poor earnings that we've seen. Remember, we saw some earnings out last week which didn't help the fate of some of those techs, like Google especially, although we did see some good numbers out from Amazon and more notably out from Microsoft last week. S&P 500 ending down. NASDAQ was the only area where we saw gains on the trading day, but I do want to show you what's happening on this drop here for the S&P 500. Remember that record high that we had, the intraday record high, 46.07 back on the 27th of July. Well, that now seems a distant memory, got this market curling over here. And interesting enough, when you look at technical analysis, and in fact, if you wind the clock back and take a look at precisely what it was I was saying, on Friday, I had this 41.03 as the price target, had that line drawn on here, and it absolutely hit that and bounced. You can see that line I was talking about there on the 24th of May, and then we saw a little bit of a bounce. A bit more of a bounce today. The 24-hour markets have opened a little bit higher, and indeed, at the moment at least, we are looking for a slightly stronger start on the US markets when things get underway later on. And we've got the Tech 100, which saw those gains that we saw on Friday, 0.25%, and we've got a little bit of a knock up on that market as well. And it's the same for the Dow. Dow we'll be looking for McDonald's a little bit later on the US session to give us some guidance potentially. And in fact, possibly maybe analysts. I was looking over the weekend, some of the analysts suggesting we could well see some good numbers out from the figures at McDonald's later on today. But technically speaking, despite the fact we've got a retracement on these markets, this is your next line of support down here at 31,430. The lows that we had back in March this year on the Dow. So I think ultimately when we see an unwind of this little bit of a retracement, it will be a continuation of these steps lower that we've seen on the markets generally. Insofar as we've seen some economic data out today, we saw some good economic numbers coming through from Australia. The retail sales data for the month of September rising by a margin of 0.9%, accelerating from an upwardly revised 0.3% gain in August. This was the third straight month of growth in retail turnover and the fastest rate since January, despite the fact we've seen the central bank raise interest rates. And the central bank raising interest rates has done some damage to the Australian dollar. Look at the direction of travel that we've seen overall for the Aussie. Although in the last 3 days, and including today, we've seen a nice little retracement. And it is only a retracement on this decline that we've seen. Assuming that the US keeps interest rates higher for longer, there is more interest in the dollar likely than we see on the Aussie. So potentially further lower lows at some point in the not too distant future. You can see the pullbacks we've seen, the retracements that we've seen, have not been as high as the previous high. So these lower highs are seeing continuing. And as of the Thursday trade, we had actually seen the lowest print for the Aussie against the US dollar since the 20th of October. So these lower highs continue. I'd want to see a break of this area up here, probably above the 65, to persuade me that there's anything other than just a small retracement in what is looking like a continuation of this negativity for the Australian dollar. Let's look at what's happening in terms of some of the other economic data, because I was saying at the top of the show that we were looking at some interesting data out later on today from Germany. Initially, this data had been for tomorrow, but they pulled it back to do it today, so it avoids the French numbers out tomorrow. Third quarter GDP growth rate expected to fall by a margin of 0.3%. Previous reading had been flat. Year-on-year estimates of a contraction of 0.2%. Consumer price index, September is likely to be 4% down to 4%. We had previously seen a reading the prior month of 4.5%. So if you add up all that, there's a potential to witness more interest rate. It's not more interest rate rises, but interest rates continue at the high levels, which is doing the damage to German growth. Then later on today, we got Eurozone economic sentiment for the month of October, 10 o'clock today, a reading of 93, down from 93.3 in the month of September. Let me just show you what's happening with the trade around this, which is the euro-dollar trade. And you can see in the last few days, we dipped below this rising line of support that we've had. We were talking about this, what was it, on Thursday, when we saw that number coming out, that strong GDP number in the States. And then we saw that retracement, and it's flatlined since then at 105.60. Tomorrow, we had the European Central Bank, of course, last week on interest rates. No move was what was seen there. We've got the Fed on Wednesday, so we're watching the Fed. And then on tomorrow, we've got the Japanese Central Bank. We've seen this dip below the 150 level recently, which has given a little bit of confidence that maybe perhaps the Japanese authorities won't do anything. Be interesting to see what the Bank of Japan says tomorrow morning on this recent rise above the 150 level for the dollar against the yen. And then on Thursday comes the Bank of England. And again, like the BOJ and the Fed, widely expected to leave interest rates on hold at current levels. At 121.12, we've got support just below where we are at 120.38. You've got a breaker there. Next line of support down here at 118.05. Now let's switch gear. Take a look at what's happening in some of the corporates to watch out for today. And HSBC has come out with numbers for the third quarter. Pre-tax profit more than doubling during Q3 as higher interest rates has boosted the bank's profitability. The pre-tax profit rising to $7.7 billion compared to $3.2 billion in the same quarter last year. However, that missed the $8.1 billion anticipated by analysts. And as a result of that, I think we've seen this drop we've seen in the Hong Kong markets. But the bank has funding a fresh $3 billion share buyback program. HSBC aims to complete the share buyback by next February, lifting the total buybacks announced this year to $7 billion. It also announced the third quarter dividend payout this year of 10 cents per share, bringing the total payout to 30 cents. This wasn't enough to lift the shares in Hong Kong. They're down 0.2%. We're opening at 601.4 at the top of the hour for HSBC, the international bank. Now let's move on to one of the stock stories we've been following right the way through last week and into this week, and that is the strikes affecting US automakers. Now, over the weekend, we've seen some good news coming through from the French automaker, which has big exposure to the US manufacturing of cars in the States through Chrysler. Stellantis, it's reported, has met some sort of a tentative agreement with the UAW in the States. But we've just seen some breaking news coming through in the last couple of hours that Stellantis workers in Canada see Canadian strike talks fail. Now, the declines we've seen in Stellantis over the last couple of weeks or so have been on the failure of talks. Remember, we saw last week a disappointing outcome of the talks with Ford, with the UAW. Ford down really heavily at the back end of last week. It also said it was withdrawing much of the investment in the high-end electric vehicles because it said it wasn't seeing the uptake. And Stellantis, same sort of feeling in terms of shares. They'll open at 17.32 on the French markets at the top of the hour. And it really depends on whether you see shares guided by the news in Canada of the talks failing, or whether you see news guided by the talks, the success of the talks in the North American or US markets with the Chrysler deals. Stellantis earnings out tomorrow. Looking to see what happens to shares at the top of the hour. Now, McDonald's reports so-called earnings before the opening of the US markets in today's trade. It could be a good set of figures, actually. Earnings per share expected at $2.99. This would be up from $2.68 in the third quarter last year. That's up 11.6% if it comes to pass. And we are likely to see 11.8% rise in revenue, according to analysts, to 6.57 billion. Now, these same analysts say the factors at play are strong comparable sales growth, innovative menu additions, expansion initiatives, increased average check value, and menu price adjustments. However, there is a headwind to McDonald's, and that is inflation. It's a big issue for the company. It's expected to have hit margins with elevated commodity prices. Food prices have gone up, as we know, increased wages as well. Something else which will affect this. If you look at McDonald's shares, we've recently found support at $245.80. The stock will open at 9 o'clock this morning, all sessions on the IG platform, at $256.36, which is where we ended up to Friday's session. And you can trade this when the company produces those earnings in the next 2 or 3 hours or so. It's about 11:30. I think we get earnings from Mackie D's this morning. Now, outside of that, we got some more earnings out this week. It's not nearly as heavy as it was last week, but tomorrow we've got AMD, all session stock on the IG platform, Pfizer and Caterpillar. Caterpillar was meant to have been last Friday, but that's been postponed. We get 3 of those companies through tomorrow, all sessions. Then on Wednesday, we get Kraft Heinz and Avis Budget. And on Thursday, the big one, Apple, after the market closes, all sessions on the IG platform. Watch out for that stock there. Also, Coinbase, another one to watch out for. We've seen some recent uplift of Coinbase as a result of hopes that the BlackRock ETF is likely to be agreed by the SEC for Bitcoin. Moderna, that's also an all-session stock. Moderna, of course, the mRNA solution to COVID, which did so well during the COVID lockdowns. There's also more, but I won't go through the list in any great further detail, but those are, broadly speaking, the big ones to follow. Now, oil continues to be dominated by the twin forces of concerns over supplies and not enough to fulfill demand. And that demand, although has the potential to weaken because of growth, as growth subsides. Let's one look at what's happening with Brent, for example. We are approaching the end of this rather strangely shaped triangle here, but that is nonetheless a triangle. It depends on where you draw your lines, of course, but broadly speaking, that is a triangle. And we are holding at 87, 86 at the moment, which is this line of support I've got on here from the highs that we saw back on the 10th of August, waiting for a breakout of that. The Baker Hughes rig count on Friday, the weekly oil rig count rose last week by a net margin of 1, adding rigs for a third week in a row to 625. Oil rigs rose by 2, gas rigs fell by 1 to 117. Back to the charts very briefly, just to update you on what's happening with spot gold. Last week was an amazing week for gold because of the geopolitics, people looking for some sort of safety. Above 2,000, in fact, it ended out at levels there not seen since the 16th of May. This now has to be a price target, 2087 if you're long on this at the moment. This is just a small retracement. I'd need to see it back down below this line down here to around about the 1900 level to persuade me that the gains are over. But you might want to look for a slightly better pricing to go long all the way up to those record highs that we saw. We're down today only by a margin of a third of 1% at 1995. That's it. 15 minutes to go before the start of today's European session. Looking for gains across the board at the moment for many of those markets. Do watch out for Stellantis and HSBC, two stocks to watch at the start. We'll be back at 10:30 with Charting the Markets.